So earned income versus passive income. This really became a paradigm shift for me when I worked at my first CPA firm, and I was doing 2 tax returns for the day. I had a tax return where there was a married couple that was making $200,000 a year W-2, and I did a tax return for a guy in Chicago that owned 20 apartment buildings. He had made about $400,000 that year in cash flow from the real estate, and he was single, which means he was in a higher tax bracket. And he was in a higher tax bracket. He made double the amount of money as a married couple, but he paid less in taxes than the married couple. And I asked my boss at the time, I said, how is this possible? And this one sentence that changed my life, it went like, it's because he invested in real estate. And ever since then, I've been trying to figure out exactly how the tax code allows real estate investors to pay nothing in taxes. And this is a little bit about it. So earned income, a lot of us have earned income. If we're W-2 employees, if we're partners, if we're 1099, if we're self-employed, all my realtors, like, they're going to be earned income. There's limited ways to reduce your tax liability if you are in this bucket. You can max out your 401k, you can do health savings accounts, and you can make more babies. That's about all you have as options to save money on taxes if you're a W-2 employee. Furthermore, you also pay a lot more in taxes in the form of Social Security and Medicare. So if you guys are a W-2 employee, go look at your last pay stub, and you're going to be like, who's this FOC and who's Medicare, and why are they taking my money? Well, that's where it's going to. And then the income that you make through a day job is taxed at a max rate of 37%. On the other side of that coin is passive income through real estate. And with income through real estate, you have the ability to offset it with other expenses and losses. There's no Social Security and Medicare taxes on real estate income like there is for W-2 or earned income. And then lastly, the appreciation that is on real estate is taxed at favorable rates, what are known as capital gains tax rates, either 0, 15, or 20, depending on what tax bracket you're in.